Good morning. This is Miles with Art Jetter and Company. Thank you folks for joining us today. We are going to sit tight. It is 10:30. That's when the webinar is supposed to start, but I will give a few other folks just a few moments to settle in. So we'll sit tight here for just a few moments and then get the webinar started with Mutual of Omaha. All right, so like I said, thank you folks for joining us. We do have Travis and Amanda from Mutual of Omaha here. As you folks have questions, please type them in the question box on your control panel at the bottom of the right side of your screen. We'll answer them at the end of the presentation or as they come up. And after the webinar, please give me a call to receive a copy of the webinar and to answer any additional questions that you may have. Thanks again for joining us. Amanda, Travis, take it away.
All right, can you hear me okay, Miles?
You betcha, that's perfect.
Good deal. Well, good morning, everyone, and happy Valentine's Day. We would like to just take a moment and thank Art Jetter for partnering with us to bring you today's insights. We also wanted to thank all of you for taking time out of your day to hear from Mutual of Omaha on such an important topic as disability insurance. If you have written a mutual income solutions policy with us, we just want to thank you for your business. If you have not written with us or have, but it's been a while, we are excited to bring you our story and product to you today. All right, so I wanted to take an opportunity to share with you as agents in the business how big of an opportunity being able to sell a DI policy is. To most people, their income is the most valuable asset they have, even over their house, car, or savings. Today, we're going to talk about how a mutual income solutions product can help replace a portion of your client's income if they are sick or injured and can't work. Did you know that 43% of all current 40-year-olds will have a DI event lasting 90 days or more by the time they're 65? Or that 51 million is the number of working adults in the US who don't have a disability insurance policy? And 3 years is the approximate average length of a DI absence from work. So as an agent in this business, you have the opportunity to help your clients protect their income. While it is something people do not want to think about, 7 out of 10 Americans say they'd face financial difficulty within a month without an income if they were sick or injured and can't work. We can help you with that. Partnering together, we can bring a solution to your clients. This slide here gives you a glance into how the rating agencies have rated us at Mutual of Omaha. AM Best with an A+ superior rating, Moody's Investor Services with an A1 good rating, and Standard & Poor's with an A+ strong rating. So the financial strength of our company is not something you need to be concerned about. A lot of people don't know this fun fact, but I wanted to share it today, that the very first policy written with the company was a disability income policy, and it was written in 1909. This is the first time we have been able to launch a quote and e-app tool that makes it easy to get business issued. Provide your client an accurate rate quote, submit the e-app, check for notification that your client's coverage has been issued. Guys, it really is that simple and fast. I can't get through a training without talking about what else we're known for. So hopefully most of you know that we have a very strong brand in the industry, and we hope that our brand, along with the sponsorships and investments that we make, helps you bring Mutual of Omaha into many of your clients' homes. The Wild Kingdom launched in 1963, and it still exists today. What comes to your mind when you think of the Wild Kingdom? Well, yes, of course, Marlon Perkins and Jim Fowler. However, what people share with us is that it's the memories of their family time on Sunday evenings watching Animal Planet. That warm, comfortable feeling and smile of the past is what they cherish most. Branding is important, and the Wild Kingdom resonates with most everyone. We want you to be able to use this as an opportunity to open the door to more client conversations. So to help everyone stay engaged and excited about the next few slides, I thought it would be fun to give away a prize on today's call. At the end of today's presentation, the first person to comment or ask a question will win a Wild Kingdom package. It can be as easy as sharing a comment on what you love most about our product, our platform, or what you plan to take away from today's presentation that might help you generate more leads or sales. So as I transition over to Travis, just a few housekeeping things to keep in mind here. I wanted to remind everyone that we do have a state special matrix available. I've shared this with Miles so that he can distribute it to all of the attendees on the call today. You will want to refer to that to understand how the product may vary by state approvals. In addition to that, we do have sample policies available on our website. So if there is any question about the coverage, that is where you would want to refer to see how that language reads. However, if you ever have a question, even after seeing the sample policy on what may or may not be covered, don't hesitate to reach out Art Jetter's office and ask. They know where to find me, and we can definitely help get those answers for you. So with that, I would like to transition over to Travis Tangeman, our product director. He joins me from Omaha, Nebraska. He helped develop the product and the platform we're going to talk to you about today, and I wanted to give all of you an opportunity to hear directly from him. So thanks, Travis, for joining us, and I'll go ahead and turn it over to you.
You bet. Thanks, Amanda. So like Amanda said, I'm the product director here at Mutual of Omaha for disability income, and really happy to be joining you guys today. So thanks for joining to go over a little bit about our disability product and how it can fit your clients' needs. So basics of disability, right? The need is really, like Amanda kicked it off, is it's insurance that replaces a portion of your income if you're sick or injured and unable to work. Once eligible, it can pay a monthly benefit for up to a maximum length. You choose that benefit period at the time you apply, or through underwriting, you can change that benefit period before the policy is issued. It doesn't guarantee you'll get it for that total time. You do have to remain disabled in order to keep getting payments, but it's really income protection is a great way to think about it. So if you think about your client's income as an asset, you protect your house, you protect cars with insurance, you protect boats, motorcycles, etc. Why would you not protect your income? And typically your income, your future income, is going to be by far the largest asset you have. So really disability insurance is a great way to protect that asset. If you look at the product overview, so as Amanda referred to, there is a state special matrix that gives all the details by state. We do have this product available through what's called the Interstate Compact. All that means is we have 40 some odd states that are exactly the same, and then there's a handful of state specials from there. But to give the basics of our product, Mutual Income Solutions, we have two kinds of designs available. You can have an accident and sickness disability and an accident only disability. And the accident and sickness is more your full-fledged coverage. Your accident only pays for disabilities that are caused due to accidents. So it doesn't pay for disabilities caused due to sickness, which can be a great option for clients who may not be eligible for disability coverage because they already have potentially severe medical conditions and want something in place. And then obviously your accident only is going to be a cheaper option. If you go through on the tables, we do have both a non-cancelable and guarantee renewable option on the accident sickness. Big thing with that is non-cancelable, you can't change rates ever. Once you have a policy in place, we can't increase the customer's rates. The guarantee renewable, we could potentially increase or change those rates in the future, but it has to be approved by states, etc. So the non-cancelable is a little bit more expensive in that case, but it does offer that protection that we will not be able to change rates on a consumer going forward. The way the product is structured is we have quite a few different occupational classes. You don't need to know all the details of them, but really the details on that are the 1A through 6A are your non-medical occupations, and the higher you go, so A is up to 6 is your cheapest premium, your 1 is going to be your most expensive, and the 2 through 5M, those are your medical occupations. Same thing, 2 is going to be your cheapest premium, 5 is going to be your most expensive. Big point of this slide is there's a lot of different options. So you can see there's a lot of different elimination period options. That's the time you need to be disabled before we would start making payments, and a lot of different benefit period options. So that maximum amount that we would pay, that varies all the way from just 6 months of coverage if somebody just wants a small amount of protection, all the way up through retirement ages, even up to age 70. So go ahead and next slide, Amanda. This just continues, and you can find all this, we'll talk about it later on our website within our product and underwriting guides. But again, there's a lot of different optional benefits you can include. There's a bunch of different riders you can see here, and we'll get into the underwriting in a little bit. I always do like to point out the premium discounts. We have a bunch of different premium discounts available for clients to be able to use if they're eligible, and we do allow more than one discount if they are eligible for those discounts, up to a maximum of 30% on their premium. So those are great options for the customers. Some basic features that every carrier has that you'll find in our product too. So within underwriting, you could have different types of outcomes. If they're eligible for coverage, you may have a standard class, which is to be the base premiums, or you can have rate ups depending on the medical conditions and the height and weight an individual has. So you could have a 25% extra premium, 50% extra premium, etc. We could reject coverage because they wouldn't be eligible for various reasons, or you can have exclusions. So we may exclude a specific item for somebody, or a specific, if they've just had hip surgery, underwriting may exclude disabilities due to causes from the hip. So that's there. It's really, there's a lot of things that can be done in underwriting. And even if there is an exclusion, the thing that I love to think about and point out is it still covers a client for every other possible disability other than that one specific item. So there's a bunch of different reasons somebody could be disabled. The reason we exclude that is to offer coverage for every other disability that's out there. The pre-existing conditions clause, if you go back real quick, Amanda, sorry, on that, is every carrier has some variation of this. What ours is a 2-year period that it looks back prior to the policy effective date for which somebody received medical advice, or a 1-year period of basically a prudent person standard. What this does is essentially saying we won't pay for those pre-existing conditions up until at least 12 months after the policy effective date, and some of that does vary by state. So any pre-existing condition that basically says we won't pay for those due to disability unless it happens later on after the policy effective date. On the optional riders, so there's kind of 2 sets of optional riders that we have. We have what are our no-cost riders, which are referred to as our AIB and FIO riders, and then our additional cost riders. The ones I want to focus on just on this slide are really our no-cost riders, which are great options to have clients be able to increase their coverage in the future without medical underwriting. So there's different variations that carriers have of this, but one is more an inflationary type increase. That's our AIB rider, where a client can choose to, we would give them 4% more coverage on their policy anniversary every year with some rules around it of going over maximums, etc. But they can increase their coverage essentially with inflation. They don't have to pay for this rider at the beginning of the policy. They simply just have to pay for the additional coverage at their new attained age when they accept that increase. The FIO is similar, except it's more of an every 3-year option, and we take a look at financials and see how much additional coverage they may be eligible for. So those are both great options to put in place at the time the policy is issued that a client wouldn't have to pay for until they actually take those increases. Go ahead into the next slide, Amanda. So for our contracts, our base contract, for those who are familiar with the DI world, our base contract is essentially a 2-year modified own occupation contract. What that means is you could be disabled if you qualify medically, etc., for up to 2 years if you're unable to work in your own occupation. That's your specific occupation. After 2 years, that definition essentially changes to any occupation you're reasonably qualified for due to your education and training. So that's the base contract. However, some of those optional riders that we have can be added on for cost to change that definition. So the extended regular occupation rider changes that definition from a 2-year ONOC to the length of the benefit period ONOC rider. But you still can't be working in any other occupation in order to receive disability benefits. The true regular occupation rider does the same thing in that it changes the definition of disability from a 2-year ONOC to the entire benefit period. However, this rider also allows you to work in another occupation as long as it wasn't your specific own occupation at the beginning. So you could potentially, through this rider, be receiving disability benefits because you're disabled in your own occupation and be working in another occupation. A quick example of this one that people sometimes think of is, take for example the example of a surgeon who maybe gets carpal tunnel and they're unable to do surgery anymore, but they want to go teach because they have the education and training to be able to teach. Well, with the true regular occupation rider, they could teach and receive that income and still potentially be paid under contract, provided they're disabled in that surgeon profession. So that is oftentimes used in medical specialties and other specialties to really have that coverage in place to where you could still go work in something else, maybe not make as much income, but then also receive those disability benefits too. Another great couple riders that I like to point out that we have as optional for additional cost are the residual disability benefit riders. So our base contract is a complete and total disability contract. So you have to be totally disabled, not working. Oftentimes people are partially disabled, where they're maybe able to work part-time or do things part-time, but they're not able to work 100% of the time or maybe even 50% of the time, but they can do something. They might not qualify for total disability. These residual disability benefit riders are essentially the partial disability riders that would allow people to receive benefits if they were partially disabled, working part-time. There's rules around what income is paid, but the key thing to note is those offer partial disability protection and allow people to be receiving partial disability payments. They wouldn't get their full monthly benefit necessarily, but they would get something. So if they're working part-time, the disability contract would make up some of that other lost income. The big difference between these two riders is the enhanced is a little bit more expensive and also allows for what's called a recovery benefit. So even after they go back to work full-time, they can receive a recovery benefit for a limited amount of time. A couple more riders that point out that can be pretty unique for Mutual of Omaha compared to the industry are our return of premium options that we have for this policy. Many times you may hear from people who are worried about the use it or lose it nature of coverage, of if they never disabled, they pay all this premium, they never get anything back. Well, the return of premium riders are available for folks to get at least a portion of their premiums back. So we have kind of two different options or two different types within the three riders. The first type is a 10-year return of premium rider. We offer a 50% return of your premiums or an 80% return of your premiums every 10 years. So essentially what this does is it will pay that percentage back on every 10-year anniversary of your policy. So at 10 years, 20 years, 30 years, if they bought it at a younger age, etc., they will return that portion of the premium. The offset would be if they were paid any claims within that 10-year period, we would deduct that from any premiums returned. So essentially, if they didn't have any claims for the life of their policy and they kept it for 30 years, they would get 80% of their premium back at 10 years, 80% of their premium back at 20 years, and 80% of their premium back at 30 years. The other type of return to premium type rider that we have is called our cash value benefit rider. This is more of a table buildup, a percentage buildup of return of premiums over the life of the policy. So this one, instead of paying at 10-year intervals, it pays when somebody either reaches age 67 when the contract would end, or it would pay when they lapse the policy. It starts at 0%, but then it builds up to all the way up to 100% at 25 years plus. So if they were to keep the policy 25 years or more and never had any claims paid, whenever they lapsed the policy or reached age 67, they would receive 100% of their premiums back. It does start at 0, like I said, for the first 5 years, and then builds up to 100% after 25 years. So there's different options depending on what the client is looking for, if they want it at 10-year intervals or if they really want it and potentially get 100% of their premiums back all the way at the end of their coverage. Some quick details just on the medical underwriting that we have for our policy. This is just, keep in mind, this is just our base underwriting that we do. There's obviously other things that underwriting can order as they find out, as they get detail or depending on the questions are answered. These are just our base requirements, our guidelines that we use for everybody. So the big thing to point out here is $6,000 in monthly benefit or less, and under age 45 on the medical, we're doing a pharmacy check and MIB. The other requirements, if you get higher in monthly benefit amounts or you get older, above age 45, 46 plus, up to age 61, we would get a little bit more requirements, the blood, urine, physical measurements. We could get APSs for cause, depending on what we find out. But really, under that 6,000 and under age 45 is more simplified medical underwriting. On the accident-only version, we only do the MIB and then pharmacy check. Onto the build chart. So referenced earlier some of the underwriting outcomes that could happen for rate ups. This is in our guide, so you don't have to memorize this. You can easily go reference it, and we'll point out how to do that a little bit later. But this just gives you our height and weight chart. So depending on the person's height and weight, we would tell you, well, they might not be eligible for coverage. They might be a standard risk, 25% rate up, 50% rate up. Again, this isn't the only thing that goes into that rating, but this is obviously, if you know a person's height and weight, you'll know this is kind of their starting point of where they'd be at on their premium ratings, or if they're eligible for coverage at all. So not only in the disability world do carriers do medical underwriting, there's obviously financial underwriting, excuse me, that goes with the coverage, because we as carriers don't want to overinsure people for more than what they're making. So on the income requirement side, the financial underwriting that we do, again, that 6,000 in monthly benefit is really the trigger point. So up to that 6,000, it's more simplified, and we're not necessarily asking for something unless there's for cause on what we're asking for income documentation, or if they're getting a self-employed type discount. So again, these are the base guidelines. Obviously, as you have more monthly benefit amount that you're looking to insure, we're going to ask for more financial information. Again, underwriting could potentially ask for more for cause. Go ahead, Amanda. On the issue and participation limits, so this is really showing you what the maximum amount of coverage we would allow by occupation class. And we don't need to get into all the details here, but you can see the accident only will issue up to 5,000. On the accident and sickness, we could potentially issue up to 20,000, provided an individual and client's income justifies that amount. The far two columns is you'll often find people who have other disability coverage in place, particularly the very far right column, the group disability coverage. The key thing to point out this is we can still offer coverage for people that have group disability. We have rules around it, and it's the nice thing about it is it's really easily built into our tools. If you know what amount of coverage they have, we'll tell you how much they'll be eligible for. So just because they have other group coverage doesn't mean they won't be eligible for additional individual disability coverage. And also, oftentimes, if the group coverage is paid for by the employer, any benefit's going to be taxable to the employee. Whereas on the individual side, if the individual is paying for the coverage, that benefit is typically not taxable to the individual. So we do coordinate with that, or we do take that into account in what we'll issue. So just know that if people do have other individual coverage or other group coverage, they may still be eligible for additional disability coverage with us. So moving on from some of the product details, really going into a few of the tools that we have. So the one-stop shop is really mutualincomesolutions.com. This is our site that we have that you can find all the information needed. It has the sample policies that Amanda was referencing by state. It has your EAP, your guides are going to be here, your product and underwriting guides, your state special matrix can be found on here too. So this is really going to be your place where you want to go and check out if you want to find out information about our product. You want to go here and find it. And there's a lot of different information depending on the tabs here. On the quoting tool, so there's within Mutual Income Solutions, after you would log in, so you would log in to start a quote, you would need to log in to start a quote and then go to an EAP. So that's where you'd go. You can use the sandbox, what we call there's a sandbox link on that site where you can play around and fill out sample EAPs. The dashboard is also there. And then also there's a guide that shows you step-by-step of how to complete that EAP. So this is just an inside look of what the dashboard would look like. And you can see at the top it says demo. So this is from the sandbox environment that you're playing around with. But if you were to log in and you didn't have any cases, this is really what your dashboard would look like. So when you go log in, start cases, they would show up here and be saved here down below. And you would, if you wanted to start a new quote for the first time, you'd hit that blue box in the top right on the start new quote to get started. There's some cool tools within there as well that help you do step-by-step guides on the quote, the e-app, and the dashboard, as well as some details on how customers would be able to sign the application electronically through what we call our secure message portal. So it helps step-by-step have clients understand what the process will look like. There's also some great tools on specific occupations within that site. So you can read the occupations here, but there's a lot of resources and information for folks on some occupations to think about targeting that you have in potentially your book of business. To think about those are individuals who might particularly need disability coverage and might have good rates that we would offer for disability coverage as well. So there's a lot of examples of why it's good coverage, what the typical policy that they may buy in terms of the market and what riders would be there, what benefit amount they like. So really just some good tools to help guide you on what occupations to look for. There's some client occupation materials too that you can share with client facing. So there's just a lot of information there on occupations to take a look at. And then there's also sales ideas that may target certain things like a return of premium rider. This is the example here. So it gives you a solution of, okay, how much would be returned over 10 years? Who might be interested in it? What's important to know? There's a lot of different examples, as you can see here, return of premium. There's cross-selling with life insurance, protecting their house, their mortgage, if they have existing DI coverage, whether it's individual or group. So there's some cool ideas there to think about getting started and targeting your book of business. In the product guide, those first few screenshots are directly from the product guide we have. They're available to download. They're an electronic version on that Mutual Income Solutions site. So you have our product guide that gives all the details of the product and riders. There's the underwriting guide available as well. Out there, it gives you all of the detailed underwriting information, anything you could ask for, what we're looking at from our product perspective. And with that, I would like to turn it back over to Amanda.
Yeah, thanks so much, Travis. I loved your reference to several of our resources and tools on the one-stop shop. So guys, really, if you are not familiar with the product and you're wanting to engage, the fact that we have that sandbox out there, it truly is a test environment. You can't break anything. Go out there, play around with it. Give Miles a call. He's an expert on our disability income product at Mutual of Omaha. He's happy to help answer any questions that you have. We want to make sure you're comfortable and understand where we fit in the market. Travis, I thought I might be the first person to throw out a question here, and then I'll turn it over to Miles and we can take questions from the audience. But where would you say we offer a lot of tools that kind of explain the different classes. Where would you say, just to name a few areas where we are pretty competitive, like real estate agents, some of those things? Can you just speak to a couple of those?
Sure. So real estate agents are a great one to think about targeting of where we would stand out, and really those white collar occupations, a lot of those would stand out. I think accountants, attorneys are other great examples of where we stand out. Small animal vets too. So if you think about and really IT programmers, corporate executives, those are really where I believe we shine from a premium perspective, and we offer the coverage that those individuals are looking for, that robust coverage that they may be looking for in terms of protecting their income.
Great. Thanks, Travis. I appreciate that. I was reviewing some premium comparisons the other day, and I'm just overly shocked at how competitive we are from a pricing standpoint in the market. So if you have not given us a try, please take a look. We would love to earn your business, so let us know how. And with that, I'm going to go ahead and turn it over to Miles and let him take over from here.
Absolutely. And I would definitely, as the one that's running a lot of these illustrations, I would 100% echo that sentiment of, I love Mutual of Omaha. Just they're really great from everything in the blue gray collar to the gray white collar. So I'll run everything from a handyman to a CEO through them, and they both have great options for either solution or scenario there. But so unfortunately, we just don't have any questions that came up throughout the presentation. So I'm assuming you just did a fantastic job of explaining everything, that nothing popped up there. But yeah, so I guess I do want to, really thank Travis and Amanda for presenting this disability product with Mutual of Omaha. It's great information. Just to follow up with that, if the attendees have any questions at all, you can send an email to di@jetter.com or give me a call at 402-330-2900. Yeah, if anybody would like a copy of this webinar, give me a call there and I'll be able to send that over to you. Once again, Amanda, Travis, thank you so much for the time here this morning. Thanks for all the folks that joined us, and we look forward to getting more business with you.
Great. Thanks, everybody. Have a good day.
All right, take care.
Thank you.